large majority of those reserves that are nationally owned are in countries that are somewhat unstable, sometimes real unstable, and potentially unfriendly to the West and the United States particularly.
America, desperate for a carbon fix, follows anyone who promises a steady supply. A U.S.-Canadian dual citizen, Paul Michael Wiebe, wants to be the dealer, hooking American buyers on Canadian product.
We are in a world of transition after 9/11, and we are in a world of transition in the global oil market. And I believe Canada has a leading role to play.
Since the Iraq War began in 2003, the price of oil has spiked 400%. The overheated market gives Wiebe a platform to preach the virtues of tar sands oil.
Oil sands have been the stepchild of the global oil market for decades and decades. They've been marginalized, bastardized, if you will. In fact, unconventional oils are emerging as a dominant force in the petroleum market.
At the oldest privately owned bank in America, Wiebe assures investors that tar sands crude, although nearly 10 times more expensive to extract than Middle East oil, is a bargain.
That security of supply as a consequence of 9/11 trumps cost of supply. And that is a fundamental shift.
3 weeks after its invasion of Iraq, the U.S. government decrees the tar sands should be counted as part of Canada's conventional energy supply, propelling it from 21st to 2nd on the list of national oil reserves.
Alberta now, from a standing start, effectively, it's approaching the production level of Kuwait. By 2045, the volume coming out of the oil sands in Alberta alone will approach 11 million barrels a day. That's a stunning figure. It's an overwhelming figure. And that will continue for a century.
If Alberta caters exclusively to America, it can satisfy their daily appetite for 9 million barrels of imported oil for the next 100 years. The twilight of Middle East oil could become the dawn of a new golden age fueled by the tar sands. But at what cost?